Hi everyone, I hope you're doing very well. Today I'm going to share with you my gold trading strategy that has made me a lot of money over the years trading within the markets. This strategy has a very high win rate, and if you do trade this the way that I'm about to share it to you, you are guaranteed to make money over the long term. This is probably the most mechanical strategy that I've ever seen. And, I'm pretty excited to share it with you guys. So let's just jump straight in. This is what you're going to be looking for within the market. So what you're going to be seeing within the market is you're going to see a range high and a range low. And what we're looking for is during a kill zone. So this line right here is simply just going to be either the London kill zone or the New York kill zone. And what we're looking for is during this kill zone, we're looking for a sweep of buy side liquidity. So that's going to be something like this, running this liquidity like so, okay? And what we're looking for is our entry model in order to get short within the market. And the reason why this works is because you can see this sort of double top area right here, okay? And what this move is doing right here is simply trapping traders thinking that this market is breaking out to the upside. You see, traders think that this is a breakout, therefore they're going to go long within the market right here, okay? And they're going to be stopped out because they're going to have a stop loss like so. This will provide the liquidity for institutions to move the market. Also, anybody that wants to get short in this market too early, their stop losses are also going to be above these significant highs like so, and they're also going to be stopped out. So any sellers, they're going to be stopped out, any early sellers, and that will also be providing the liquidity for institutions to actually move the market in the intended direction like so. So all we need to do during a kill zone is wait for a sweep of these significant highs, and this could be the Asia session high, or this could even be the London session high. It doesn't really matter. The point is we need to identify them highs, and then we can look for our entry model like so. And then, we're going to be entering somewhere within this region right here, and we're going to be capitalizing on this move to the downside right here. So this is the entry model that we are looking at trading. And this model alone, I guarantee, will allow you to literally become profitable within the markets. So let's look at some live trade examples so I can break this down further for you guys. So I'm just going to break down a trade that I actually took this week. So this is on Monday with all of the members at Toto Capital. Here is the analysis that was sent to the premium community, and here is the outcome of this trade. So now let's break it down so you can understand, I am actually executing this strategy on a daily basis. This is literally my bread and butter. So let's just jump straight in. So what you can see right here, the EMAs are all in order. So head over to the indicators tab at the top of your screen, apply the EMA 50, 100, and 200 to your chart, okay? Once you've added the EMAs to your chart, you then want to make sure that they are all in order. So you can see the 50s on the bottom, the 100s in the middle, and the 200 is on the top. That means that we are sell bias on this market. So we are only looking for shorts during the kill zone sessions. What I've actually done is I've set the time zone to the New York time zone just for simplicity. So for example, we have the Asia session, which is from 7 p.m. until midnight. Okay. We have the London session, which is 3 a.m. until 5 a.m. And then we also have the New York session, which is 8 a.m. until 10 a.m. So these are the 3 kill zone sessions. And you can see here we're heading into the New York kill zone, the New York session. And therefore, according to our entry model, we're looking for a sweep of this Asia session liquidity right here. So we need, a sell bias. We need to see a run of buy side liquidity. So let's see if we get that. So you can see during the New York kill zone, we sweep this buy side liquidity right here. And now this is the important part. We're simply waiting for a bearish confirmation. That's literally just a bearish candle. And then we can enter on the break of that candle low with invalidation above the liquidity sweep. And then we're looking at targeting a 1 to 2 or a 1 to 3 risk to reward. So we're triggered in the trade right here. And let's play this on. So this is during the New York session. And just after that, you can see this trade smashes take profit for a 1 to 3 risk to reward. So you can see what's going on here. We're sell bias. Our daily bias is shorts. We're looking for a run of this Asia session buy side liquidity, which is what we get right here. And then we go for our entry model. Entries on the break of that candle low, invalidation above the liquidity sweep, target either a 1 to 2 or a 1 to 3, both absolutely fine. And that is your trade right here. Okay, so this is also on gold on the 15-minute time frame. And you can see right here we're heading into the New York session. So this is 8 a.m. New York time, okay? And so we're heading into the New York kill zone, and we're looking for a sweep of the London session liquidity. And we are buy bias, okay? The EMAs are all in order. You can see the 50, the 100, and the 200 are all in order. Therefore, we are long bias on this market. So keep it very, very simple. Keep it very, very mechanical. And this brings me on to another point in the fact that, you need to be extremely patient within the market. You need to wait for price to come to you, okay? Because, you could go and get all emotional and start entering up within this market right here when you know deep down that this market is more than likely actually going to run this London session liquidity, grab them orders. This is just a liquidity sweep and then push to the upside. Okay, so you need to be extremely patient, allow price to come to you. Whether that means just setting your limit orders in the fact, an alert, set an alert, wait for price to come to that level. And if it does, then you can act accordingly. Okay, so be super, super patient. So right here, we've swept the London session liquidity. Now we're literally just waiting for a bullish confirmation. So let's zoom in a little bit. We get a bullish confirmation right here. So essentially our order, our buy stop is going to be placed above here with a stop loss below here. And let's see if we're triggered in. Okay, so we're not triggered in. The next candle actually breaks the low. Okay, so our order then gets moved to the next candle. Okay, and then let's see if we're triggered in right here. We're actually not, but we are still within the New York kill zone. So we're still just literally waiting for a bullish confirmation, like so. We can then enter on the break of this candle high with invalidation below the liquidity sweep, and let's see if we're triggered in this time. So we are actually triggered right here. And remember, guys, just target a 1 to 2 risk to reward. So we're triggered in right here. And you can see during the after hours of the market, just before the Asia session, this trade smashes take profit for a 1 to 2 risk to reward, and actually also offered a 1 to 3 within the market. So this is another great long example using the most profitable strategy on gold right here. And just to recap, this is your London low right here. we see that manipulation. We see that manipulation right here. There was a couple different entries that we were looking at taking. However, as discussed, we never broke the candle highs. But when we did, like so right here, you can see we got that rapid expansion to the upside and we caught that trend continuation play. So this is another great buy example right here. I just want to give you guys a very, very important tip within the market. So for example, if we're executing right here, if we're looking to get long like so, you need to ensure that every single trade that you're taking, you know exactly how much you're going to lose if that trade does hit your stop loss. And then, when you're hitting a 1 to 2 or a 1 to 3, you know that you're going to be making 2 times how much you're risking right here. And literally, if you're not calculating your lot sizes or your risk, for example, I recommend 1 to 2% of your capital every single trade. If you're not calculating that, there is no way on earth that you can actually ever become profitable, not long term anyway. And that's what we are here for. We're here for long term profitability. Guys, if you haven't already, make sure to join the free Discord for free analysis and to stay ahead of the curve with upcoming YouTube videos. Also, guys, make sure to check out my official website. The link is also in the description down below. Thanks for your time as always. If you have any queries, drop them in the comments. I will get back to all of you guys. And yeah, you take care. Bye-bye.